Well, in the last PBR we actually saw very little in terms of capital gains tax, but that didn't really surprise me because when we saw the big announcement in the PBR in the autumn of 2007, where it took the tax rate effectively from 10 to 18% for a lot of people, we saw a lot of tax-fuelled activity effectively prior to the following 5th of April, and I just think the Chancellor wasn't prepared to have that happen again. Obviously we can't second guess what's going to happen in the budget. We haven't got a crystal ball, we don't know what's going to happen to capital gains tax rates, but there will be a number of people who are worried that businesses they've built up over the years, when they sell, they're going to pay higher rates than they would if they sold today. Now, I don't think you can necessarily accelerate the sale of a business by a number of years, but what you might want to think about is, are the shares held in the right way? Do you want to split your shareholding with your spouse to use 2 lots of annual exemption? And maybe if you're planning to sell in the next couple of months, is there something you can do to bring the sale to before the 6th of April? You'll pay your tax 1 year earlier, but at least you'll know what your tax rate is going to be. And that's what people want. They want certainty. We're obviously seeing a lot of speculation now about what's going to happen in the budget to capital gains tax rates. They changed in 2008, so we're 2 years into a regime. Will they change again? If it were down to me, I would leave pretty much as is, although what I might do is introduce a short-term, long-term CGT rate, so people who held an asset for maybe 1 year only, which feels a little bit more of a speculative transaction, maybe charge them at a higher rate, but people who hold longer term, and in particular entrepreneurs, keep them at the lower tax rates.